On behalf of UTI Asset Management Company Limited, we thank you for taking out the time and joining us today. We welcome you to the virtual brokers and analysts meet on the announcement of the company's forthcoming IPO. Before we begin, I would like to introduce the management and distinguished guests who will be addressing today's gathering. From the company, we have with us Mr. Imtiazur Rahman, whole-time director and CEO, Mr. Amandeep Chopra, group president and head of fixed income, Mr. Vetri Subramaniam, group president and head of equity, Mr. Surojit Saha, chief financial officer, Mr. Vinay Lakhotia, head of operations, and Mr. Sandeep Samsi, head of investor relations, corporate strategy and communications. And representing the BRLMs, we have Mr. Amulya Goyal, Head FIG Investment Banking India, Citigroup Global Markets India Private Limited, Mr. Ajay Saraf, Executive Director and Head Investment Banking, ICICI Securities Limited, Mr. Co-CEO, Axis Capital Limited, Mr. Sunil Khaitan, MD Equity Capital Markets, BofA Securities, DSP Merrill Lynch Limited, Ms. Sonia Das Gupta, Managing Director, Corporate Finance, FIG, JM Financial Limited, Mr. Subhajit Roy, Head Equity Capital Markets, Kotak Mahindra Capital Company Limited, and Mr. Sajal Kumar, Head Coverage Investment Banking, SBI Capital Markets Limited. I would now like to invite Mr. Amulya Goyal, Head FIG Investment Banking India, Citigroup Global Markets India Private Limited, to initiate the proceedings.
Thank you, Nikhil. Thank you for the kind introduction. Good afternoon, ladies and gentlemen. On behalf of management of UTI AMC and running leads, I would like to the broker and analyst meet launch of UTI AMC IPO. As you all know, the brand UTI is recognized very well across the entire nation. UTI AMC has been pioneering innovations in the mutual fund industry over its rich heritage more than 55 years. UTI AMC has the largest share of assets under management from B30 or beyond top 30 cities with close to 11 million live portfolios, which is a strong testimony to their brand and the distribution. The company has a very strong page, being owned by 5 ships: SBI, Bank of Baroda, PNB, and Price, which needed here. I think before I hand over to the management, I just wanted to give you all some brief details of the IPO. The IPO is an offer sale for secondary shares, about 38.98 million shares. The price fixed for a range of 500 to 502 per equity. The issue size at the top end price is INR 21 CR. The QIB allocation across in the entire issue is 50%, which the anchor will be 60%. Retail is 35%, and the balance 15% is for non-institutional investors. The anchor book opens on Monday, 28th of September. The issue opens on September 29th, Tuesday, and closes on 1st of October, which is Thursday. We will, of course, release the anchor details on Monday to the wider public. On behalf of the book runners, we are very delighted to welcome UTMC to the capital market through this IPO. Without further delay, I would like to hand over to the management of UTI AMC for walking you through some of the finer details about the company. Thank you.
Nikhil?
Thank you, sir. I would now like to call upon the management of UTI Asset Management Company Limited, Mr. Imtiazur Rahman, Whole-Time Director and CEO, Mr. Amandeep Chopra, Group President and Head of Fixed Income, Mr. Vetri Subramanian, Group President and Head of Equity, and Mr. Vinay Lakhotia, Head of Operations, to take us through the company, its journey, and the investor presentation. Mr. Rahman.
Thank you so much, Nikhil and Amulya, and good afternoon to all of you. It is indeed my privilege and honor to serve the mother UTI, the UTI, the pioneer and the oldest mutual fund in our country. We started our journey in 1964. Since then, we have been serving the nation. We are the second largest asset manager in our country, and UTI currently manage over 8 lakh, over 9 lakh 70,000 crore. UTI serve over 11 million investors, and we have a very strong presence in beyond 30 cities. Number of investors we serve makes us the largest server of the unit holders in our country. We have very strong parentage. We have 5 strong shareholders, both from East and the West. And we have 5 lines of business, which we manage through 4 our subsidiaries along with the parent company. And next, please. We are a pure play asset management company, professionally managed, board governed structure. Our board is distinguished by its diversity of its experience, diversity of its gender, and diversity of its independence. 8 out of 10 non-executive directors are independent, and 3 out of 10 directors are women. These directors bring with them as a sounding board to us a very rich experience in the field of mutual fund, insurance, banking, HR practices, and in technology. We have a talented pool of individuals, professionally qualified, committed in all areas of operations. Most importantly, our investment professionals, they have with them over 520 years of experience. And it is their tireless hard work, dedications, following a very solid process that they have been winning awards for UTI years after years, not only in India, but overseas as well. Our HR policy is indeed in line and benchmark to the industry. Next, please. The team with me here on this roadshow and the presentation along with me is Mr. Amandeep Singh Chopra. Aman joined UTI in 1994, and since then he has been serving this company. Mr. Vetri Subramaniam joined us 3.5 years back, and Vetri is responsible for the entire group's equity functions. Aman is responsible for the entire groups of fixed income functions. Our CFO is Mr. Surjit Saha, joined UTI over 30 years back, and Mr. Vinay Lakhotia joined UTI over 20 years back, and he is responsible for the operational activity of UTI AMC. Mr. Sandeep Samsi. Sandeep is also working in UTI for over 20 years, and he is responsible for corporate communication and corporate strategy, and will be a point of contact for investor relationship. With them, we have talented pool of other individuals to serve this particular company. Next, though our route goes to 1964, and between 1964 to 2002, we built a very strong track record of creating wealth and as well as building institutions. But this IPO journey is of a company which started its operation in 2003, February 1, 2003. We basically transited from the Unit Trust of India, MIT institutions. So over the last 17 and a half years, we had a great journey. We achieved many milestones. Few of them I will highlight for your benefit. When we started with a paid up share capital of 10 crore. We had a AUM of 12,000 crore approximately. From the financial institution, we became the only pure play mutual fund. Over a period, and starting from 2004, we started acquiring business. We acquired the schemes of IS. We acquired we acquired 49% stake from Shinsei in one of our subsidiary. We brought in T. Rowe Price, our strategic partner. We built our business. We grew our business. We became and we are a customer-centric organizations. We have established a very strong distribution reach across the length and breadth of our country. Our distribution channel is unique, which my colleague will share with you in the following slides. We have all channels to distribute our product: banking, IFAs, digital, and indeed direct channel to coordinate and work with the institutional clients. During this period, we put in place the best-in-class processes for the risk management, operations, internal audit, and indeed for the investment operations. We grew our business significantly. From a pure play mutual fund, we are now the complete asset management house and company. We have started with 12,000 crore of AUM. We manage over 9,75,000 crore of AUM currently. We had a paid up share capital of 10 crore. We have already paid a dividend to our shareholders over 750 crore. Our group net worth is over 2,800 crore. We have been managing the cost aggressively, and we have and had an extraordinary focus on the profitability and to manage the profitable piece of business. Next, please. What we are offering. We are a part of the industry which is and will continue to be, is my belief, a very attractive industry. Let me share you a few data points. Our industry, between the period of 2015 to 20, grew at a rapid speed of 18% CAGR. This is a pandemic period, and this is my belief, and as well as supported with the data, that our industry will continue to grow. Our brand is a well-known brand, household name in our country. We are doing every bit possible to refresh our brand to stay relevant with the young India. We have a very long-term track record of being innovative. We are first to come with a ULI product, retirement product, master share. My colleague will deal with this in greater details. We have a wonderful team to perform, deliver consistent and the superior return. This is my commitment to, and also to re-emphasize that our HR policy is and will continue to be in place, which will help us to attract and retain talents. With this, I will request my colleague, Mr. Vetri Suramaniam, to share with you the industry related information. Vetri, over to you, please.
Sure. Thank you very much, Imtiaz. Yeah, so I'll just start off with the first point in terms of the sort of key investment highlights, which is the fact that the industry trends have been very favorable for our business. I'm sure most of you on this call are more than familiar, so I won't sort of dwell too much on it. Just to start off, top left-hand side, what you see is the very simple fact that India is a high savings rate economy, and obviously that's very important for our business model. Savings have been growing consistently in the economy, but what's more important is the fact that financial savings are growing even faster, and of course that's led to the coining of the phrase financialization of savings. Bottom panel, left-hand corner, what you see is the size of the bank deposit market, which is the largest component within financial savings, and the relative size of mutual funds. As you can see, we are rather tiny. The opportunity for us is to help people achieve their financial goals using the multiple products that we offer as an industry to be able to achieve their financial goals and goal setting programs that they might have had. And obviously, we think mutual fund products are far more suitable to enable them to achieve their goals. Later on, Aman will talk about the growth and UTI's footprint. But what you see there in the bottom panel middle is that it's not only the mutual fund product that's growing, but also allied businesses like portfolio management services, alternate investment funds are also growing. And UTI, of course, is present in all of these, and he'll elaborate on that. Finally, as we see this migration of investors into the mutual fund industry, what they're looking for is brands that they can trust, which are visible to them, the connect which is available on the ground to be able to reach out via advisors to the firm. And that is where we are seeing that there has been an increase in concentration of market share with the top 10 AMCs. And obviously, UTI is a beneficiary of that. But I'm going to hand over to Aman now, and Aman will talk about some of these company-specific strengths that sort of play to this particular industry dynamic. Over to you, Aman.
Thank you, Vetri. So just dwelling a little bit more upon what Imtiaz mentioned in his opening remarks, particularly around some of the key investment highlights and strengths of UTI. Starting with brand, clearly we believe that with 55 years of history in the financial markets, we have a very strong brand recognition. We are often talked about as being a household name, but what's also important to highlight is that we're among the top 5 preferred industry brands in the mutual fund industry, which consist of over 40 players. Quite early on, we wanted to be a broad-based asset management firm. So, we started as an asset manager of mutual funds. And along the way, we have diversified our businesses into managing AIFs, provident funds, insurance funds, as well as pension funds. And that has really added to our overall size and scale of business. So we've created a fairly diverse portfolio of asset management businesses covering both wealth creation as well as for retirement that you see in the chart on the bottom left. We believe as an independent and pure play AMC allows us to enter new business areas as well as forge relationships to target our growth going forward. Next, we do have a fairly established position in retirement solutions. I mentioned this briefly earlier. We run this through 2 business lines. We have a portfolio management services, which manages the country's largest defined benefit public provident fund, the EPFO, as well as insurance funds of the Indian Post Bank, along with a few other institutional mandates. Our subsidiary, UTI Retirement Solutions Limited, manages the market return-linked defined contribution fund of the national pension system. This is also a fairly rapidly growing piece in the pension industry. We are the second largest in these growing businesses, as you would see, in the bar chart, a fairly rapid pace of growth over the last few years. And we have built a fairly strong track record. We won awards for managing EPFO money as well as for the pension funds under the NPS. How do we benefit from these business lines? Firstly, it helps build a fairly strong visibility and a track record of managing large institutional money. Particularly, this becomes important because it reinforces our brand when households realize that their pension money or their provident funds is being managed by the country's second largest asset manager. Secondly, it allows us to successfully bid for further institutional funds or mandates as and when the market develops. We've seen a similar trend globally, and Vetri touched upon it in his market outlook earlier. We think a similar trend will evolve in India, and as a professional fund manager with experience, with scale, we believe we can capture a fair share of that market. Thirdly, it has also helped cross-sell some of our mutual fund products, particularly in the case of equity ETF to EPFO when EPFO was allocating money into equity asset class. So we have built scale, infrastructure, and a team to manage it, and we look at this as a strong area of growth for us as well. Next, moving on to clearly our distribution channel. As a pure play AMC, we built our own distribution channel, and this has been largely an in-house effort. We believe we have a deep and wide pan-India distribution network. Quite early on, we started with barely 50 branches, and now we've sort of added more than 110 and still growing. We cover 96% of districts in India, which would possibly be the largest for an asset management firm. And this has been enabled through a network of our branch offices, business associates, and relationship managers, which cumulatively target almost more than 900 plus point of presence. So what's really unique in terms of our distribution network, like I mentioned, is our own branches across the country. Secondly, we have a very unique distribution channel in terms of business associates called BDAs, or chief agents, who cover certain geographies or territories where a physical branch may not be feasible, and has actually allowed UTI to penetrate much deeper into the hinterland of the country. So this has also led, obviously, to having one of the highest share of AUMs from the B30 cities among the top 10 AMCs. We also believe we have a very strong IFA connectivity, and more than 60% of the equity and hybrid AUMs, come in from the IFA fraternity. Our future area of focus remains in the top 30 IFA community, as well as the banks and distributors, where we need to increase our market share going forward. Coming across, away from the traditional channels, clearly on the digital front, we have seen a fairly strong growth, both in terms of gross sales, as well as the initiatives that we've undertaken, particularly through building office on the go sort of apps for our distributors called the UTI Buddy. Also, we have mobile apps for our individual investors who can transact directly, as well as monitor their investments and also read market insights from our investment team. And all this is enabled seamlessly through a mobile app. So this has clearly been very helpful in getting access to some of the new generation investors who are looking at the mutual fund industry. Further initiatives on the digital piece clearly remain around ensuring that we improve customer engagement and experience, and we also broaden our our availability through third-party distribution platforms. All these initiatives clearly have led to a fairly strong and stable client base. So the next slide looks at the three key aspects that I want to highlight. We believe we have a fairly balanced mix of individual and institutional assets within our overall mutual fund AUM. With nearly 11 million folios, we have the highest number of folios in the mutual fund industry, contributing to almost more than 12% of the market share. And in spite of such a large number of investor accounts, we have the lowest grievance ratio, which does highlight satisfaction with our investor service. Another very interesting set of metrics clearly is shown on the bottom right part of this slide. You would look at some of the numbers here. More than 49% of equity fund AUM has individual investors with holding periods of more than 3 years. We also have some very unique products within the mutual fund space called solution-oriented funds, where the lock-in period is more than 5 years. But given the investment horizon, where you could be saving for your children's future, you could be maybe saving for your own retirement, and pension needs, the typical investment horizon of investors in these funds is much longer. So moving on from some of the key highlights of the AMC, touching briefly upon the investment process, and I'll take you through the fixed income vertical. For fixed income funds, clearly the core of our investment process lies around building strong research capability. We use a combination of proprietary credit research methodology and internal ratings, and we have been investing in research since 2003. We believe we have an experienced team of analysts and portfolio managers. There's also a fairly comprehensive review mechanism at various levels, and we will touch upon that. In terms of strategies, since we run a whole range of products from the short end to the long end, we have a combination of bottom up and top down depending on whether you need to target yield management, which is true for the liquid or the short-term category of products, or you want to target duration management, which is particularly true for the long-term and yield funds. For all portfolio managers or fund managers, performance is measured relative to the peers in the benchmark, and that's how both fund managers and the analysts are also, compensated. We have built a fairly strong track record of over 18 years. We've had a good run until 2018. We did face some challenges in 2018-19, but we are coming out of that. We've also won several awards for our experience and performance, which Imtiaz touched upon earlier. In terms of performance, I must highlight that at the short end, both liquid and money market fund have outperformed the benchmark indices over 10-year period, and at the longer spectrum of the product category, we have the UTI Gilt Fund, which has outperformed its benchmark index as well over 10 years. So these metrics do highlight the long-term track record and performance of our funds. And with that, I'll hand it back to Vetri to take you through the equity vertical.
Sure. Thanks, Aman. So obviously some elements are common because after all we are an investment organization and that's the heart of what we do. Very quickly on the equity side, I'd say the key building blocks for us are our investment process, the people, our investment team, and the culture. I think these are, we've got it pretty well oiled in terms of a smoothly running machine today. And I think that's really what will continue to be the driver of our fund performance going forward. I think one of the things which really distinguishes UTI is in terms of our diversity when it comes to the kind of schemes and the styles that we use to manage them. We don't really have a one style fits all or a one method fits all approach. We execute a range of strategies, at one end of the spectrum, deep value, at the other end, out and out, bottom up, growth oriented style investing. But it's all tied together with a common process, and that's how we really drive discipline in terms of execution of each of those individual mandates. Important part is eventually how you measure performance, and I think over there, the philosophy is very simple. We look at 1, 3, and 5 years to make sure that fund managers are also thinking very long term in terms of the way that they manage their portfolios. Moving on from this to the next slide, just a quick word on the left panel. What you see is some of our product innovations that I think Imtiaz also alluded to. Very quickly on performance on the equity side, which you see in that middle panel, what we think are our core 6 strategies for growth going forward. 92% of that AUM beats the benchmark on a 10-year basis, and even if you look at shorter term numbers, the numbers have been quite healthy. And even through the pandemic, I think our range of outcomes across multiple strategies has been quite strong. Obviously, the longer term. The active side of our business is really the core of what we think will drive the organization. But we do have a strategic beachhead in terms of our presence on the passive side of the business. We have a significant market share there. And what we've really focused on is putting people and resources behind passive to make sure that we are pretty much best in class in terms of tracking error, not just locally, but even comparable to parameters elsewhere globally. And if this business grows, we think we're pretty well placed to be able to participate in that. Moving on from products and performance to the next slide, just a quick word on governance. We are, after all, a fiduciary business, and therefore risk management and governance has to be inbuilt into our DNA. We've got a fairly well set up organization framework for risk management and for governance, which goes all the way from adherence to process, the investment committee, unique element to UTI, the equity and debt steering committees, and finally the board risk management committee, all of whom are also supported by an independent risk management team, which provides us the information we need. So, as an organization, this is we believe in quite strongly, and I think we have a strong framework for governance. I'll just hand over to Vinay and request you if everybody could go on mute. Yeah, I'll just hand over now to Vinay, and he's, I think, going to run you through the financials on the next slide.
Vinay, are you on mute? Vinay?
I think the host might have to unmute Vinay.
Sorry, there's just some technical issue. If you could just give us 30 seconds, please.
Yeah, now we can hear you. Now we can.
Yeah, are you able to hear me?
Yeah, go ahead, please. Go ahead.
Yeah, thank you. On the financials, I'll actually focus on three key metrics. First is our revenue margin number, secondly on the cost ratios, and finally on the profit margins number. On the revenue margin, our operating revenues as a percentage to our quarterly average AUM is around 45 basis point on an overall basis. As per CRISIL Mutual Fund Industry Report, we are among the top four players in the industry as far as revenue margin numbers are concerned. We believe that our high revenue margin number is primarily because of three important factors. The first and foremost being the high proportion of profitable assets like equity and hybrid fund as a percentage to our overall AUM. Over the last 2 years, if you can see on the top right-hand side of the chart, the percentage of equity and hybrid fund as a percentage to our overall AUM has increased by almost around 120 basis points, and over a period of 3 years, this number is actually closer to 340 basis points. We are strategizing to further increase the percentage of actively managed fund within our total AUM, which will further improve our revenue ratios going forward. Secondly, our asset management fees of both equity and hybrid funds have been consistently high among the leading players in the industry. This is primarily because of our distribution mix. We believe that because of our distribution mix, which is tilted highly in favor of the IFAs, we do enjoy a slightly higher revenue margin number. And the third point, which aids our revenue margin number, is the high share of AUM from B30 center. Almost 46 to 47% of our AUM of equity and hybrid funds come from B30 center, and the high share of AUM from B30 center does raise our overall revenue margin number. This AUM is slightly stickier and it actually offers a comparatively higher margins as compared to a 330 center AUM. Coming to the second metrics, which is the cost, our existing cost ratios of 32 basis points to our quarterly average AUM as per the CRISIL Mutual Fund industry is among the top six players in the industry. We have been continuously working over the last 2 to 3 financial years to improve our cost ratios. As you can see on the top left-hand side of the chart, our cost to total income ratios have come down by almost around 170 basis points in last 1 year, and cost as a percentage to average AUM is also declining because of the efficiency we have brought in our operation. Having said that, cost ratio reduction is a work in progress exercise, and we are further strategizing to reduce the numbers. We are actually leveraging on digital and technologies to enhance our operational efficiencies as well as cost optimization. We believe that going forward with the growth in AUM and operational efficiency in place, operating leverage itself will play a very important role in reducing our cost ratios further. Coming to the third metrics, which is the profitability, our PAT margin to the quarterly average AUM is roughly around 20 basis points, and we are among the top 3 players in the industry as far as PAT margin numbers are concerned. This is the CRISIL Industry Mutual Fund Industry Report. We believe that with our enhanced focus on high revenue margin products and cost optimization, we'll be able to improve our PAT margin number going forward. So with this, I'll pause and hand it over back to Mr. Rahman for the remaining slides on the presentation.
Thank you very much, Vinay. So friends, we are on our journey to get listed. As Amulya pointed out, our IPO will open on Tuesday, September 29, and will be closed on Thursday, October the 1st. This is a period of a Navaratri, very, very auspicious period. What we are offering? We are a member of industry and very serious players. We are UTI AMC, a very serious player of industry which is extremely attractive. Grew at the rate of 18%, and I'm fully confident that it will grow further, if not more, but at least the same pace. Our brand is a household name. We as a management team, we are extremely careful and we have planned to refresh our brand to stay relevant with all stakeholders, particularly with the young India. We have a very long-term track record of creating wealth. This IPO, it is my belief, will help UTI AMC to continue to be a board governed, independently managed asset manager, will help us and also gives an opportunity to serve our shareholders and investors. We, our HR policy is in line with the market, and I would like to assure you that I own the complete and full responsibility of HR practices. And we as a team will do everything possible to ensure that we attract and retain talent. We have our HR policy is indeed in line with the market, but we have now the ESOP schemes also in place. Our strategy, next please. Our strategy is very simple. We have extraordinary focus on product and customer, and the customer the first. We as an investment organization, we are committed to generate the consistent and superior return. We are putting in place and fixing the gap wherever we don't have the product, like a small funds and another fund. Our customer-centric attitude will continue to be our focused area. The distribution is very important piece in our business or in any business. We have very strong distribution reach. We will continue to expand. We will continue to have deep engagement with all lines of distributions, IFAs, bank as a distributors, national distributors, also fintech companies. Our digital strategy, we are fully committed to have a great digital strategy. We have a team and we are adding many members in our digital team to be one of the top AMC in the digital space. We are fully committed to allocate our resources in the other line of business, while our key focused area will continue to be on the asset management. And I re-emphasize that our UTI's HR policy will continue to be help us to attract and retain talent. With this, I will pause here and open the forum for Q&A to be more interactive. Nikhil, over to you, please, and thank you.
Thank you, sir. We will now open the floor for the Q&A session. While we have already received some questions, we'll be taking those first. In the meantime, we would like to remind you to kindly post your respective questions in the Q&A panel available. We will try our best to ensure that all questions are answered. Coming to the first question. UTI MF has lost market share from 8.5% in FY15 to 6.8% in FY20. What's your strategy to regain the lost market share?
Very good question, very relevant. This is my belief and our belief as a team that we have arrested the fallen market share. In order to reclaim our lost land, we have 5 important pillars in place. And most important of this is the performance of our schemes. Our flagship equity schemes performance is one of the best in the industry. Our high yielding fixed income product performance has significantly improved over the last 8-9 months. We have a deep engagement program with key distributors in top 30 cities, IFAs. We have put in place, we have a deep engagement with the nation distributors. Our product is on the platform of all relevant bank as distributors. So whether it is a private sector bank or public sector bank or foreign banks, all of them are ready to distribute our product. We have a pricing advantage which we will use and we are using, will continue to use. Our brand is a household name, and we have a talented pool of individuals, particularly in the investment team, to deliver superior return. With these parameters in place, I'm confident that we will be in a position to regain our share. As a CEO, I have a key focused area. At least 25 institutional clients I supervise myself. 50 IFAs I supervise myself, relationship. Likewise, we have a very focused program to manage the relationship. I'm sure with our determinations and the commitment and our track record of serving the investors for 55 years' time, the trust of investors is and will remain with us, and we will regain the market share. Me and my team has a proven track record of turning the bad time into the good time. Nikhil?
Thank you, sir. Coming to the next question. The overall expenses as a percentage to AUM is higher when compared to other AMCs. What is the strategy to scale down these expenses?
We have two lines of expenses, and my colleague, Mr. Vinay Lakhotia, will share with you the details of the expenses and the expense management strategy. Vinay, over to you.
Yeah, so as I stated in my presentation, our cost ratios of around 32 basis point is slightly higher, and I'll state the major factor for this has been our stagnant AUM base over the last 3 years. But with the kind of performance in our equity and a flagship fixed income product, we are confident with the growth in AUM. And as I stated earlier, with the operational efficiency in place, operating leverage itself will play a very important role in reducing our cost ratios going forward. I believe that we have some levers in place on account of our employee costs, employees retiring, and there have been some talks of reducing our administrative expenses in this particular financial year. All these things will reduce our cost ratios in next 2 to 3 financial years.
We have been aggressively managing the cost, and I was the CFO till 9 months back, and we will continue to manage the cost aggressively and to give the better return to our investors and shareholders. Nikhil?
Thank you, sir. Coming to the next question. Can you please help us understand what are the yields earned on EPF or PMS mandate and retirement AUM?
Surajit, can you take this question, please?
From the overall PMS business, which is part of the UTI AMC balance sheet, we earn a revenue of 15 crore against expenditure of around 4 crores. We have an EBITDA of around 11 crore. And NPS business is part of one of our subsidiaries, that is UTI Retirement Solution, which has an annual PAT of around 5 crore, which contributes to our consolidated profit.
Nikhil, next.
Thank you, sir. The next question reads, you were the first to have a unit scheme as early as 1964. Do you think you have lost the first mover advantage and need to go faster to play catch up? Towards doing that, what are you planning?
Indeed, we have been serving the nation since 1964. But I'm happy to share with you that on AUM basis, we are the second largest asset manager still in our country. So far as managing the portfolios are concerned, we are the largest folio managers in our country, in the mutual fund industry. Indeed, on a pure play mutual fund perspective, we are not the number one or we are not the top three. But it is our endeavor and our aggressive strategies supported by the performance, team, pricing power, brand equity, and distributions. We are working very hard and we will implement our aggressive strategy to grow our share of wallet. Nikhil, next one, please.
Thank you, sir. Coming to the next question. You talked about superior performance. Can you please share what's the average holding period in equity versus the industry? And the question is for active equity.
Is it for the individual stock or average holding period of our investor?
The average holding period for the investor.
Vinay?
So I'll give you a breakup for an equity and non-equity AUM. For equity AUM, more than 2 years, we have almost 56% of our AUM is more than 2 months old, 2 years old, as compared to an industry average number of around 47%. And in case of an equity, more than 24 months, almost 32% of our AUM is more than 2 years old, as compared to an industry average number of around 21%. So on an aggregate level, our AUM, which is more than 2 years old, is around 44%, as compared to the industry average number of around 33%.
So we are extremely strong in beyond 30 city, though we will attack in the top 30 city, but we will continue to at least maintain and defend strongly our home turf in beyond 30 city. We will put our best efforts to increase our share of wallet in those beyond 30 cities, for which we are increasing our footprint. Nikhil, next, please.
Thank you. The next question is the net gain on fair value changes an unrealized gain?
Come again, please. This is an incomplete question.
The question reads.
Yeah.
Yeah. Can you hear me, sir?
Yeah, please go ahead. Go ahead.
The question reads, is net gain on fair value changes an unrealized gain? Q1 FY21 unrealized gain is 90 crores, excluding which the PBT would have declined 63% YOY in Q1 FY21. What is the strategy to arrest the falling profitabilities?
Surjit, do you have a data on this? I'm not sure about that, what Nikhil is trying to deliberate on this.
Yeah, Nikhil, you are correct. See, why this 90 crore unrealized gain has come up because of the March 20 figure. If you remember the March 20, we had a negative unrealized loss because of the one of our seed investment which we have in our UTI International. We have invested in India Dynamic Equity Fund in the year 15-16. $23 million, which was around $35 million in March 19. And because of the indices fall in the March 20, it came down to $26 million. So we had a unrealized loss in March 20 figure, because of which our consolidated PAT came down to 274 crore. And since the market has improved in the Q1 of June, the overall unrealized loss which happened in March 20, we could recoup the most part of it. That is why there was a substantial jump in our unrealized gain, which has created this, what you are expecting, like.
Vetri, can you just explain about the seed capital and the structure which we have, performance of our IDF fund as well as the AUM? Vetri, please.
Yeah, sure. Thanks, Imtiaz. Yeah, so we have a UCITS compliant equity fund, which is now over 5 years old, and this is the seed investment that Surjit referred to. So, about 30 odd million, 23 million was the original investment. The fund itself has grown to over 300. But essentially, you're right. The mark to market on that has gone through the P&L because of the fair value accounting.
Nikhil, hope you answered that question, clarified. Yes. Nikhil.
Thank you, sir. So the next question reads, what is the reason for the low profit growth in FY19?
FY19, low profit growth. Vinay?
Yeah. Before coming to the actual financials number, let me give some perspective. For any asset management company, there are two major sources of income. First is the income from the management fees, and secondly on the treasury income. On the management fees, prior to October 2018 onward, the scheme expenses were actually be allowed to be charged in the AMC financials and not in, they are allowed to be charged in AMC financial. Post regulation changes done in October 2018, all scheme expenses are required to be charged only to the mutual fund scheme and not in the AMC financial. So when we compare the income from the asset management company for financial year 18-19, the income of management fees is a gross revenue number, and the same need to be netted off with the scheme expenses line item appearing in AMC financials when we compare the management fees of FY 19-20. So comparing on a net management fees, there have been a slight decline of roughly around 52 crore in our management fees, and that's primarily because of the fall in the AUM of our fixed income fund, mostly because of credit issues. And secondly, on the treasury income, as Saha already pointed out, we have to need to make a provision of roughly around 82 crore because of the mark-to-market impact on account of market appreciation, and because of these two factors, the profit for a financial year 19-20 has come down in comparison to financial year 18-19.
So when the country faced the credit issues, we as a management decided not to invite new subscriptions in our high-yielding fixed income product. And as a result of which we have reduced the commission and increased the exit load. We were determined and committed to look after the existing investors. And that is helping back to us. I'm not here to give you any unpublished data because we are in the silent zone. But as a direction, I must give you that our strategy is to go for the pause of subscription and look after the existing investors have started paying dividend back to us. Nikhil, next one.
Thank you, sir. The next question reads, can you give us a segment-wise yield for the mutual fund AUM, the PMS AUM, and the NPS AUM?
So on the mutual fund fee, AUM for equity and hybrid fund, we charge an AMC fees of roughly around 100 basis points. For fixed income product, it's roughly around 28. For ETF and index fund, it's closer to around 5 to 6 basis points. And for liquid fund and money market fund is around 9 to 10 basis points. So the weighted average of all these categories is roughly around in the range of around 45 to 46 basis points of the operating revenues, as I explained earlier. The yield on the PMS side, especially slightly on the lower side, it's less than 1 to roughly around 1.25 basis points. But on an aggregate PAT level, as Saha explained earlier, we do earn the PAT of closer to around 12 to 13 crore on the PMS side of the business. And on the retirement side, the PAT number is closer to around 6 to 7 crore.
Thank you, sir. Coming to the next question, can you divide your overall AUM between debt and equity and other government funds? What was it in 2018 and what is it currently?
Vinay, can you deal with this or you want me to deal? Vinay?
Slide 80, 17 now.
Yeah, so I'll give the mutual fund numbers. So for equity and hybrid fund, March quarter 18 number was closer to around 58,500 crore, and liquid and income fund it's closer to around 77,000 crore. The similar number for June 20 are equity and hybrid fund of around 52,000 crore and income and liquid fund of roughly around 60,000 crore. Also, the ETF number I like to share for March 18 it was 9,200 crore and for June 20 it's closer to around 25,000 crore. Aman, maybe you can give the numbers on the government business.
Sure. So I think slide 11 actually gives you a breakup of the sort of size of AUM that we derive from the institutional mandates under PMS as well as retirement solutions. So close to about 6.9 trillion rupees comes in as part of our PMS division, where good about little over 6 trillion is just coming in from EPFO, and the balance, like I said, is from certain other mandates. And on the retirement solution subsidiary, where we manage the national pension system, we have close to about 1.35 trillion rupees coming in. So this is within the overall size of 9.87 trillion of total assets that UTI AMC manages.
Thank you, sir. Coming to the next question. It's regarding the age profile of SIP investors and the contribution of B30 in the SIP pool in both value and volume. Could you please throw some light on this?
Vinay, you have a slide on this. You can.
Yeah. So if you look at our SIP book, more than 50% of the SIP book is more than 5 years old. So I don't have the data on the age profile of the SIP investors because we'll have to look at that. But that is the investment profile, the age profile of the investors.
Thank you. Coming to the next question. Is the trend moving towards ETF, which results in lower fees to AMC? Please share the trend in the types of schemes favored by new unit holders, both in institutional, HNI, and retail.
Vetri? Vetri? This is a question of active versus passive. Yeah.
Yeah, sure. So just in terms of trends, if you see, I think the aggregate share of the ETFs in the industry has now gone to 6%. But if you were to look at it in terms of where the majority of the money is coming from for equity passive products, it is primarily on account of the investments driven by EPFO, which, as you are aware, has an allocation to passive equity, and correspondingly, all the provident funds, which could be managed by companies themselves, are also allocating into passive. So, the share of such institutional provident fund type investors in the passive products, we would say is in the very, very low single digit number. It's really dominated only by the EPFO. If you look at the structure of the non-provident fund investors, it's a combination of some retail investors who sometimes come either directly or they come through some of the fintech platforms. And also there are obviously, as you are aware, some registered investment advisors who charge clients for their advice, and they've been allocating some money into passive. But at this point of time, I would say it's primarily the institutional provident fund driven money which is coming into passive. The actual demand from retail and HNI is still quite limited. But we are making sure that as an organization, irrespective of where the growth comes, we want to be present and therefore we've got a clear leadership position in the passive business as well. Yeah, I think
Coming to the next question. Yes, sir. Coming to the next question. The question reads, why is the IPO priced at a lower valuation?
Price is basically the market discovery process which we have followed. We have a team of very highly qualified and reputed investment professionals, BRLMs, and they have visited the market, got the market feedback, and based on that, they have suggested this model. I will request Salil to answer this question. Salil from Axis Capital. Salil?
Yeah, thanks, Mr. Rahman. It's good to hear that question sometimes that, why is this priced at a lower end? I think it's important to note that UTI AMC is in the business of making money for its investors across its mutual funds and so on. So it's very important that it itself gets its pricing correct. And I think Mr. Rahman is on the ball on that what we've done is, as bankers, we took, widespread feedback from good quality institutions across the board, respected that feedback to ensure that you are able to price this at a price point wherein a wide range of investors believe that by investing in this IPO at this particular point in time, we should be able to make good returns. So, that's really gone into the pricing of this particular IPO. And we've, of course, taken into account all the other comparables. We've got two well-traded, large listed companies. Looking at the earnings of UTI AMC relative to some of the others have also been factored in while we came to this price. We're glad that the pricing looks attractive, and we're quite sure that this will help the IPO investors make money and eventually, ensure that UTI AMC per se trades well and creates value for all its shareholders.
Thank you, sir. Coming to the next question. Can you throw some light on the contingent liabilities related to pensions, and will we be making provisions on it?
First of all, this particular point is sub judice. It is in the various courts, the High Court of Mumbai and Supreme Court. And as you know, we have won the case in the High Court of Mumbai and went to the matter in the Supreme Court. So far as provisioning is concerned, we have not provided. Our positions we have clearly outlined in the RHP, both in the legal sections of the RHP and as well as in the risk factor of the RHPs. I will urge you to go through it, and it is very clearly mentioned, outline our position there.
Thank you, sir. Coming to the next question. The mutual fund industry AUM has grown from 12 lakh to 27 lakh crores in 2015 to 2020. How have you fared in the same period?
Reality is we have lost market share after registering growth. Let me give you the data, which is the public data. In June 18, we had a market share of 6.55. In January 19, our market share was around 7%. But because of the credit issues, we had some challenge. But going forward, as I mentioned to you, that all the 5 levers are in place in UTI to outperform the industry number. Performance of the schemes of UTI, the team of UTI, brand of UTI, distribution reach of UTI, and the pricing power with the schemes of UTI has will help us to outperform the industry growth. This is our determinations on the best efforts to do and capture the more markets.
Thank you, sir. Coming to the next question. If we see the Q1 FY21 results of MTM gains, there is a drop in yields versus FY20. Can you elaborate on what led to this yield decline?
Vinay and Surajit, whoever wants to take this question.
No, just like to clarify that the market correction that a significant fall in the market that happened in the month of March, while the market has corrected, but the average AUM has not grown to that extent. So the average AUM as compared to last year, our average AUM in spite of the market appreciation is roughly in the range of around 54,000 crore of equity and hybrid fund as compared to the 60,000 crore. But post June, our average AUM of equity and hybrid fund has taken the full impact of the market correction, and the yield will be in the similar range as compared to FY19 Q2 financial number.
Thank you, sir. Coming to the next question. The return on net worth is relatively much lower as compared to peers. What are the measures that we are taking to improve the same?
The two important measures are there. Return to net worth also depends how big size of the net worth is versus the yield which we give. We have revised our dividend policy, and our dividend policy says, which has been outlined in the RHP, that going forward, at least 50% of profit after tax, board may consider to declare as by way of dividend. So minimum 50%. It may go to any number. The board may decide on a year basis. That will help us to improve this particular ratio. Vinay, do you want to add anything here?
No, sir, I think FY20 was a slightly abbreviation because of the mark-to-market loss in our treasury income of 83 crore. That's why our profit has come down, which has impacted our ROE and return on net worth. But going forward, since this has already normalized in the June quarter financials and with the high dividend payout ratios, we are confident of improving our ROE and returns on net worth in line with the industry benchmark numbers.
Thank you, sir. Coming to the next question. Passive funds and other alternate fund focus limit revenue expansion with lower management fees emerging from them. Do you see the mix tilting focus more towards equity hybrid funds ahead of incremental revenue expansion?
We have made our solid presence and credible presence in the pension business. We as a team is working very hard and will continue to work hard to mobilize high yielding asset, equity fund, hybrid fund, and the high yielding fixed income product. Our focused area is to mobilize high yielding products.
Thank you, sir. The next question. The ESOP in UTI has been issued at rupees 730 in 2020. Why is the issue price at rupees 550 and not higher than the ESOP's price?
Salil can answer this question better, but I must tell you, ESOP is for the long term, and the vesting period is 3 years. Exercise period is 4 years from the end of the first year of vesting period. And this is a strategy to have and retain long-term, is a long-term incentive plan. And that is the reason, I don't know I can't have the exact correlations. Salil can help me better to answer this question. But there's no correlation between the ESOP price and the IPO price to my understanding.
Yeah, I think Mr. Rahman has put it correctly, and that's the point. That I think the IPO price is a discovered price wherein a large majority of people, institutional investors, feel comfortable that one can come in and ensure that the stock trades at a better price point once you are listed. So I think that's the discovered price. Intrinsically, therefore, IPOs do get traded at a discount to fair value for sure. That's been always the case if they're priced correctly. We believe that's been the case over here. I think a well-traded stock post the IPO will in fact be good from the ESOP holders' point of view, because eventually there is better chance for even the ESOP holders to eventually in a long term create value as the stock trades better basis performance. So yeah, there's no direct correlation between the two. It is purely a discovered price based on overall good quality institutional demand, which we are seeing already to be pretty strong.
But I would like to also assure that when the ESOP price was decided, it was again the professionally done. We had hired the services of the professionally managed organization, consulting organizations to guide us. So we are in the right side of the law so far as ESOP pricing is concerned. And it is a long-term incentive plan. And we are very happy as a management that yes, my company and our company is going for listing. That is more important for us.
Thank you, sir. We'll take the last couple of questions now. The next question reads, do you think the recent outflows in the mutual fund industry is temporary? And are investors preferring buying stocks over investing in mutual funds?
First piece I will take care. Second piece my colleague Vetri will take care. I have no reasons to worry and does not give me sleepless night about this very small outflow. It is only 4,000 crore out of almost 8 lakh crore. It is a 0.5%. And that too during this very, very unprecedented time. But the data speaks for itself. The AMFI data suggests that the number of folios have increased. It means we have not seen a very large reduction in the folios, rather we have seen the increase in folios. And that gives me a lot of satisfaction and happiness. Another piece of the part of the question, Vetri is more competent than me to answer. Vetri?
Yeah, sure. Thanks, Imtiaz. Yeah, so we can keep speculating as to why there has been some increase in direct retail participation in stocks. The truth is nobody knows for sure. It's a global pattern. If you look at the data, even in the US and China, there's been a definite surge in retail direct participation in stocks. Is this because people are sitting at home, they have more free time? We really don't know. I think the way we as an organization look at this is that penetration levels of equity in India, whether directly or through mutual funds or through other such alternate products, still remains abysmally low. Anything that causes investors to start to come into equity markets, either directly or through funds, is welcome. I think over time, people will realize that for some of them, perhaps direct investing is a skill and they have the time to be able to do that. Many will realize that they are better off outsourcing that to companies like us who manage it for them. And therefore, we don't really look at it as a threat. But again, as to the actual reasons why this has happened, all I would say it's a global trend and we can only, speculate about what's caused it to happen.
Thank you, sir. The next question. What is the nature of other operating incomes? Net gain of fair value changes. It is 10% of your revenues.
Or the other income. Surajit?
If you see our restated accounts, the other income is around 9.2 crores, right?
Okay,
So
go ahead,
I
explain.
don't know when. Yeah,
Whatever the
9.2 crores is the other income, and other income, there is one part in that, if you know, according to the GST rule, that the corporate office needs to bill to our UFCs and UFCs. So there is a contra income and expenditure in our books of accounts, which is part of this other income. So other income is in line with the other years, like.
It is a contra entry as per GST that GST regulation warrants us to treat as an arm's length basis and charge to our UFC, the branch offices, and that is how we have shown in the income, and same amount we have shown in the expenditure, and that is the contra entry as per GST rules and regulations. Nikhil, next one, or
Thank
is
you,
it
sir.
the last one?
We'll take two more questions.
Okay.
The second last question reads, does T. Rowe remain a passive board investor or any plans for global reach and managing global flows?
T row is a passive. What is the question? T
Does
row is
T. I'll repeat the question.
Uh,
Does T. Rowe remain to be a passive board investor?
T row price has not been a passive investor. Till now, they have been our strategic partner. T row price is with us since 2010, and they helped us a lot in putting in place our investment processes, risk management processes, our communication strategies, and as well as they supported us in technology, and as well they supported us in our international operations. Vetri has mentioned to you that we have two steering committees, and in this steering committee, each steering committee, one of a very senior professional of T Rowe Price participate. When we started, they used to interact with our investment folks, associates, once in every 15 days. And since the system or the process has been matured, they meet every quarter. On a board, they are very sounding board member. They are present on each and every committees. They help us a lot in getting connectivity to our international operations. Wherever their clients inquires and have an inquiry of our India fund, we are referred. Going forward, the shareholders agreement will fall away. But this is my belief that since T Rowe Price will continue to have 23%, they will continue to support us the way which they have been doing so far to UTI AMC. Nikhil?
Thank you, sir. Coming to the last question, our revenue from sale of services is down by almost 25% in Q1 FY21.
Which one? Come again?
The revenue from sale of services is down by almost 25% in Q1 FY21.
Sale of services. We don't sell any services.
MC fees income only. No, it is mainly because if you compare, you are comparing with June 19, is it? If you are comparing with June 19, you have to net out with what Vinay said earlier with respect to the scheme expenses, and then if you compare the two AMC fees, it will be at par, because you have to just net off the scheme expenses with respect to the revenue, because in June 19 there was a scheme expenses, and June 20 the scheme expenses are not there. So if you just
yeah, because of SEBI regulations, now we get the net AMC fees. We don't charge any AMC expenses in our balance sheet. So this is not the apple to apple. You need to normalize the number to get the right number.
Sure, sir.
Nikhil?
Thank you. Thank you, sir.
Thank you so much.
I would now like to invite Mr. Ajay Saraf, Executive Director, Head Investment Banking of ICICI Securities Limited, to give the vote of thanks. Mr. Saraf.
Thank you, Mr. Rahman, Amandeep, Vetri, the entire UTI management team for taking us through this presentation and the key highlights of the IPO. Given the company's strong positioning in the asset management industry, we hope that this issue will see a blockbuster response from the investors. UTI is the second largest AMC in the country in terms of overall asset under management. UTI is leading and pioneering pure play independent asset manager with more than 55 years of heritage. Just to summarize on the issue, once again, the IPO consists of an offer for sale up to 38.98 million equity shares. The price band is 552 to 554 per share. The IPO opens for subscription on 29th September, and closes on 1st October with the anchor book opening on 28th September. I would like to thank all of you for attending this virtual meet and sharing your thought with us. We look forward to your support for making this issue a huge success. Thank you.
Thank you, Mr. Saraf. I would like to thank everyone for joining the virtual brokers and analysts meet of UTI Asset Management Company Limited for their forthcoming public issue. Please feel free to reach out to us for any further queries. You can email us at ipo@uti.co.in or ipo@adfactorspr.com, and we will do our best to revert to your queries within 48 hours. Take care and stay safe. Thank you.